Okay, to start off the wrap-up session, let's just look real quick at what type of news we have in the works, and kind of take it from there. So as far as today goes, we're pretty much past everything today. We did see retail sales for the U.S., which came out better than expected. But likewise, or not and last month's numbers were also revised higher. So you can see that both those numbers came out better. So everything looked really actually pretty fantastic. It took a little bit of the steam out of things here because 0.4% better than the 0.2 expected. But after this was revised up to 0.5, it was still less than last month. So that's kind of where we saw a weird reaction on the dollar pairs. So that's what we're looking at there. As far as tomorrow goes, we don't have too much news. We just have the PPI, and that's it. And that's not a huge mover. The big news that we're looking for and waiting for and watching for definitely comes next week. We have tons of news next week, by the way. Tons of U.S. news, but really the only thing that the dollar cares about this coming week, I mean the only thing, is the FOMC statement and press conference, which happens on Wednesday. Now, that's not to say that there's not going to be some moves, because there's going to be plenty of moves before then, but that is going to be a semi-big-ish deal. So just plan on that being like a crazy event, like a ridiculously crazy event, because it probably will be. Okay, that being the case, let's look at what we have coming up on this euro dollar. We're sitting in the euro dollar right now. If anyone's unfamiliar or I guess unaware, not unfamiliar, unaware of our trade, we sold the euro dollar at 137.70 and we have a profit target of 137.25, and that's in the notes area. So 137.25 is just this missed daily pivot, and I think we're going to get there. I'm pretty sure we're going to get there. That's a pretty easy run. It's about 20, a little over 20 pips from current market price. So we just want to get one more little push lower. We're just about 25 pips, creeping between 20 and 25 pips in profit on our trade. And I'm just going to hold on to it. This daily pivot is going to get hit, and we're going to be in the move. It's just that simple. So let's at least try to get a good 40, 50 pips out of this trade. So no change. I'm not locking in profit yet. Once again, we're in at 137.70. I haven't locked in profit. I'm not changing the stop. I'm not changing the profit target. I'm just holding on to that 137.25, and that's what we're doing. Now, if we get a big crazy dip down, then I would still consider buying the dip of euro dollar around 136.50. But that's what we're looking at. So that's where we are. Now we're coming into a pretty massive double top here on this euro dollar. On the grand scheme of things, we are very much not overbought in any real aspect, except for one thing, and I'll show you that in just one moment. But as far as everything else goes, missed weekly pivots, missed daily pivots. I mean, we have this missed daily pivot that's right here, and we've got this missed weekly pivot that's, you know, a little over 80 pips below current market price. There's nothing major on the euro dollar on the downside, and it is retracing just a little bit as it runs into these highs. My bet is that the euro is going to break 138.00 and 138.30 with little to no problem, and we'll probably see this run up into the 140 area. Beyond 140, I don't know. That's where it gets a little sketchy, and I don't know. But I think we're going to be able to easily break through that high. We're going to start running into some of the big resistance levels, and I think we could, kind of really test that. And we may not all the way hit 140. Remember, we have some big, huge trend lines right here. If you guys remember my chart, my monthly chart here, remember that this is the financial crash. This is the start. We have this huge rundown. This is where the government steps in for QE1, big rally. QE1 ends, it drops. QE2, big rally. QE2 ends, big drop. And then QE3 has happened right around this area, and it's still in rally mode. Now, with the December meeting next week, if this is if QE is starting to end, if it's starting to taper, if they say that for this coming meeting in a week, then this would be a perfect spot for the euro dollar to really start turning and coming right back down and making a huge move into the much lower levels here. So far it's just been really kind of textbook bouncing, and we could see a huge move down into those into the 120s area, at least back into those lows, I think is a very, very real possibility. But we've got to get some news from the Fed. If they don't say anything, if there's nothing mentioned, and they stay a little bit on the dovish side, then we're probably headed through 140. We could be headed into some of these bigger levels. We could be headed into the low 140s, 142, 143. So just keep that in mind if they don't say anything. And that would be great too, because if that did happen, we're only just a little ways away from this guy, and if this ran up a couple hundred pips, then that would give us a very excellent opportunity to sell this. Yeah, it's a good point. It's a good point, Steve. Yeah, we'll as we get closer, Tuesday or so of next week, we'll maybe think about positioning something. But I'm over trying to guess what the Fed's doing. That's as risky business as anything. I'd rather trade the reaction, especially when we have these big levels and these big setups that we know about. So guessing what central banks are doing is, you have much better odds in Vegas or at the lotto. So that's one of those things. There's definitely a good chance of taper this coming week, but there's also I'd say equally a good chance of not. Yeah, it seems likely, but just remember the Fed has done some things that absolutely did not make a whole lot of sense at the time, and still don't, things that still don't make a lot of sense. So trying to add logic to anything government related is typically a pretty bad idea, because I don't think that's part of their decision process usually. Okay, so pound dollar, here's what we got going on with this pound dollar. It's coming down a little bit. We've got some missed weekly pivots back here, particularly this guy, 160.50, a couple hundred pips away right there, so that's looking good. I don't know what I want to do with the pound dollar at this point, honestly. I still think that we could see the pound dollar move higher. We may be left waiting again until the FOMC meeting on this one. We don't have any really excellent price action, price patterns. We have a tiny little bit of a bear flag right here, which is worth keeping an eye on. And if that ends up breaking, then that could be what we need for a little bit of a push down. On the short term side of things, as far as bear flags and bull flags go, I like trading before the breakout. And so if the pound dollar runs up into this area right here, which is about 163.65, that's the daily pivot, that's 200 moving average, top of this bear flag area. If we run into about 163.60/65, I would consider shorting and targeting probably 163.00. So I'll make sure to I'll put that in the notes, but again, just a little run up to that I think will give us a nice continuation on this bear flag. So that's what I'm going to be looking for on the pound dollar. That is merely a very short-term trade because I don't know that we're getting the big long-term setup just yet. We may not be. I don't know. We're going to have to see how this one goes. But on the short-term side of things, let's look to short around 163.60, targeting about 163.00. Aussie dollar. Now, here's a couple of things to remember on the Aussie dollar. We have a bull or a huge bear flag on this one right here as well. Straight down movement, and then it's consolidated sideways. Now, the thing we have to take into account on the Aussie dollar is 45 pips above current market price is the daily pivot point. And the daily pivot is definitely going to be something that if this just breaks lower, then that'll be pretty interesting. We're not super far away from this low right here, this 88.45 area. This is a pretty crucial spot, and we're about 75 pips away from that. So we could just see one more stab lower on the Aussie dollar, and then that might give us a little opportunity for a bounce, especially if this daily pivot point's not hit. And it looks like it might not get hit. So look for trades, or look for breaks of this low here of 89.10/12 area, and see if we can get a run down into that 88.50 and even 88.75 before we start looking for some bounces against that 88.45 area. So it's just a bear flag. Trade the break. Watch this thing run down. Hopefully, give us a nice little movement there. But we're still definitely keeping in mind. I mean, it doesn't help that the RBA is saying that the Aussie dollar specifically, it's pretty rare that central banks say specific prices. The European Central Bank, in a statement, said, high exchange rates are difficult, and they can weigh on the economy and the recovery. And then the euro sold off like crazy. In the U.S., they've hardly talked about the exchange rate at all. And then Australia comes out and says we need it to be closer to specifically 85 cents to the dollar. That's a specific number. That's not something we hear or see too terribly often. So that is definitely, as far as anything, or as far as everything goes there, that's probably going to give us some continued selling opportunities on this. But on the short term, we're probably a little bit overextended. We probably need to see 40 or 50 pips of retracement. So if this doesn't break, if this ends up retracing, remember that shorting against this 90 level, 89.90/90 level, is going to be probably a good bet as well. So I'll update that in the notes for the short-term trades and short-term setups and so on. But that's kind of what I'm looking for there, and I think there's probably going to be a little bit of a pullback, but we're definitely at least minimally targeting 88.45 on the pound, on the Aussie dollar. Now, one thing that's interesting, I probably have to go back a long ways here, but I feel like this Aussie dollar has, when it was way back here, it does. We have this gap right here. We have this nice little gap that was left about 20. I think we're down into that. It was about a 35 pip gap back in September when this just skipped right on up. And so we've hit that, and now that's kind of out of the way. We had this missed pivot point, this 91.30 that got hit, and now we're just kind of about to fill that gap. So that's looking pretty solid, pretty good. And now that that's kind of out of the way, remember we're going to be looking for one more push lower. This is too good of a continuation pattern for that to just end. So if we do get a little skip higher, let's short against 89.90/ the 90 area and target that 88.50 Aussie dollar. Nothing too much on Aussie yen. It's still just, I guess it's doing what markets do, which is going up and down, but it's been very, very choppy and consolidated for the last month, and it's not giving me too much that I'm excited about. Pound yen headed back up again. We're coming off this trend line pretty nicely, actually, so that has held quite well. And we've got a nice little channel on that, so it's bouncing around. This is a nice little continuation pattern. Remember, we have these train tracks right here on the daily chart as it's bounced off some of that support and some of that trend line and so on. And so as we start to get back up above about this 169.25 area, 169.30, that's above this pattern, and away we go. So this thing should have another 100 pips to press higher. So look for opportunities, look for buying opportunities on this pound yen. Look to buy against this support, against this low. We're about 150 pips away from that, but buying opportunities against about 167.75 should be pretty good on pound yen, so we'll keep an eye on that. Targeting a double top, targeting that 170. So that'll be a good little option there. Dollar CAD had a really nice bounce. We finally took out that weekly pivot that was lurking for a little while. It went just a bit lower. I was looking to see if we were going to hit that 200 moving average. It got within 25 pips or so, and then it had a big old spike up 80 pips off that low. So a really nice move on dollar CAD. Remember, this is also creating a bit of a bull flag. So look for similar type setups on this dollar CAD. As we have this little bull flag in the works right here. Keep an eye on a run down to that 200 moving average and that daily pivot point. I would be pretty happy about getting long with stops below this 105, 50, 60 area and getting in around 106, 10, 20, somewhere around there, and just letting this thing go, just letting it ride and heading on up. So watch for an entry around that 200 moving average, around that daily pivot point on this bear flag setup, and look for that breakout to the upside to happen. So the reason I think we're going to get that push lower is we have a big, nice shooting star right here that will hopefully cause just a little bit more downside movement. So we're going to look to definitely buy that dip on dollar CAD. Should be some good opportunity coming up there. Euro Aussie, we're still holding on to everything on the Euro Aussie. We've got a fantastic bull flag here as well. So let's keep an eye on that. Watch that bull flag. We've got missed daily pivots after missed daily pivots and weekly pivots and so on. Remember, we're short Euro Aussie and we've hedged our position, but this thing just keeps pulling away. We're now, from the first missed weekly pivot point, we're now 720 pips. And from the lower missed weekly pivot point, we are about 12, just right around 1,200 pips on the dot. This is definitely on the very, very high side of how far this will run away from weekly pivots. And we have two in a row, and they're both pretty far away. So we should be getting up to an area that a little bit of a peaking point here. We've broken some highs, and it's continuing higher and so on. But I think that this this Euro Aussie is going to start running out of a little bit of steam coming up here sooner than later. Remember that this has rallied up about 1,400 pips in the last month. With little to no retracement. It runs, it consolidates, it runs, it consolidates. One thing that I like to look at is kind of these series of threes. So we kind of had this 1, consolidation 2, consolidation 3, consolidation, and then it's these big spikes here. So it's going to be definitely running up to an area of exhaustion and of resistance. We're going to be looking for third positions, but as I've mentioned before, 154, 50, 60 is a good area to be watching, and so we'll keep an eye on that if we can get one more push higher there. As far as the rest of these pairs go, the only other thing that I'm watching and interested in is the dollar yen. Dollar yen is nicely approaching this 103.75 area. And it's kind of been consolidating and bouncing around the last couple of weeks here, just below the high of the last. How long has this high been in place for? So we're right at the high since 2008. So dollar yen is interesting. I'm not going to be too rushed to jump into this, but I do think there's going to be a good entry opportunity to potentially short against that high. Something that I would put a pretty tight stop on, but could be headed up in that direction. So let's keep our eye on that. We'll be watching for any setups that we need to take and or jump into there. And so on. So there you have it. There's the details, questions, comments, pairs you guys are looking at, so on and so forth. Yeah, that's a good question, Steve. That's a good question.